What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com. I have with me my research analyst, Matt Clark, and we're here for another episode of Ask Adam Anything. Matt, I'll let you take it away.
Yeah, I found this question in our email inbox, which, by the way, you can email questions you'd like me to ask Adam Odell, feedback@moneyandmarkets.com. We'll drop that right below here. So you can ask anything. Nothing is off the table. I found one here I kind of want to focus on today, and this came from, I believe the name was Jacob. We don't give full names when we talk about who who emails or who comments on YouTube or whatever. So it's just Jacob, and Jacob says, I invested in Gevo stock, which is an alternative fuel company that seems promising to me, and it's gone up 30% in roughly a month. Should I sell and reap this profit? Or is this company's stock likely to go a lot higher, in your opinion? So I thought maybe you could riff on Gevo a little bit and dig into it and use all the tools at your disposal to answer Jacob's question.
Yeah, absolutely. So first of all, I'm going to give something of a cop-out answer, and that is that I cannot tell you specifically whether it's right for you to sell Gevo at this point. And the reason being, there's a saying that you don't take stock tips from people that you don't know or that you don't follow from start to finish, because they might tell you to get into a stock, but they're not going to be around to tell you when to get out of it. And if you've been trading or investing for any length of time, you know that the exit strategy and the position sizing strategy is every bit as important to your long-term success as your entry price or what stock you actually go into. So unfortunately, Jacob, cannot give you a specific answer. I don't know if you're a trader and you're typically taking profits after 10 to 15%. In that case, Gevo's 30% profit would be a huge winner, and maybe you should take profits. Maybe you're a longer term investor and 30% is nothing. Maybe you're looking for 10 baggers. So I also don't know how you've sized this position. I don't know if this is 50% of your portfolio, in which case I would say take some profits and try to get some of your original investment back and let the rest ride. Maybe this is half of 1% of a more diversified portfolio. In that case, I'd say maybe hang on to it. So I really don't know your situation. So I cannot give you a specific answer to whether you should sell this at this point or not. I apologize for that, but I will try to give you some analysis. This was a company I was not intimately familiar with. I'm not still at this point intimately familiar with it. So I'll give that disclaimer. I pulled it up about 5 minutes before we began recording this video, and I used some of the tools at my disposal to give you some things to think about. First of all, standard textbook analysis. We're recording this on June 10th. On June 9th, the stock made what's called a bearish engulfing candle. And that's basically where the stock makes a new higher high. And then by the end of the day, it makes a new lower low, and it closes below the previous day's close. That is typically a sign of a sentiment change in the stock. So typically there was a run up in the stock from early May into early June. So the past month or so, the stock ran from about $4.50 to about $9 or so. So nearly doubled roughly. And so after that run, it seems like yesterday sellers came in. It seems like sellers regained control of the stock and pushed the price lower. So that's basically what a bearish engulfing candle looks like. So I would not be surprised. The stock right now, as we're recording, is trading at $8.64. I would not be surprised to see this stock pull back before it goes higher. And I would be looking at maybe a potential pullback to anywhere from the $6 to $7 range. So that's not saying that it's definitely going to happen, but that's what I would be looking for. It is in an uptrend still. It had this huge run from last December, basically from $1 to $14. So there was a lot of interest in the stock, and it's pulled back some. But it is still in an uptrend. So that's certainly something I look for when I'm looking to buy stocks. I want to buy stocks that are already in an uptrend. Doing that both increases your odds of success with a long trade, and it also decreases your risk on the downside. So all in all, I think this is a pretty favorable entry point. If you look at the fundamentals, by the way, I should have started off by saying this is a renewables fuel company. So they basically make renewable jet fuel and renewable fuels as an alternative to oil and gas. And so this is basically an innovative, disruptive company and an innovative, disruptive industry. I like that. With that comes a good deal of unpredictability, and you have to kind of look far out into the future and see whether you have faith that the company is actually going to be able to develop and produce and sell and market and be profitable on the products that they're developing. So this company, like many of those early startups in this space, is not consistently profitable. So if you look at our green zone ratings, if you go to moneyandmarkets.com and at the top right hand corner, you'll see in green zone ratings. You can type in any ticker symbol there, and we will give you an overall rating as well as the 6 factors that we look at to rate stocks. Those 6 factors, 3 of them are technical or price-based, and those are momentum, size, and volatility. And 3 of them are based on the company's fundamentals, which are value, quality, and growth. This stock rates below average, frankly. It's a 34 out of 100, so that's below average. Its best score is on momentum. So as I mentioned, it had quite a run up over the past year or so. On a technical price-based momentum-based factor, it does score quite well with a 70 out of 100. But the rest of the scores are mediocre at best. Nothing really above 50 or so. And that's largely because the company is still figuring out profitability. Now, one thing that does concern me that I looked into quickly, and I would want to look into more before I actually recommended a stock like this, is that if you look at their quarterly sales, they've had sales over the past several years, but over the past 2 or 3 quarters really, the sales basically went down to 0. So I pulled up very quickly the first quarter of 2021's financial results. And I saw this one paragraph here which says that during the months that ended in March 31st, 2021, no revenue was derived from this company's production facility in Minnesota related to ethanol sales and related to products, whereas in the previous quarter, they had earned $3.7 million in sales. And they say that as a result of COVID-19 and in response to an unfavorable commodity environment, the company has terminated its production of ethanol and distiller grains in March of 2020. So that's basically why you see the past 3 to 4 quarters of sales drop to basically nil. They say that they are basically retrofitting or rejigging their Minnesota facility to not produce ethanol, but to produce isobutanol. And that will begin in June of 2021. So basically this month. So they kind of have a leap of faith here because it's a little bit concerning to see a company that is producing a product with a revenue, and then all of a sudden for multiple quarters in a row, they have no revenue. If they do have a fairly good amount of cash on their books. Let me see. I saw the figure. I think it was it's about $525 million worth of cash and only $3 million worth of debt. So all in all, they do have the cash to kind of weather a pivot, so to speak. And I need to look further into why they're doing this pivot. Probably they believe that the margins on these other products are going to be better and that there's a larger market for that. But it is a little bit concerning because their share count, the number of shares that they've issued over the past 12 months has increased 800%. So they obviously did a very large equity raise. That's probably where the bulk of that $525 million worth of cash came from. So now it's just a matter of how are they going to use that cash? How long is that cash going to last? And how quickly will they get their new products online to be generating revenue? And what will the profit margins look on that? So for me, this is very much a TBD situation. This is a stock to watch. This is a stock to look into more. As a trade, I would not be getting in today. I would wait for something of a pullback. Just as a note, the 200-day moving average is at about $5.34, and the stock price right now is at $8.62. So it is in an uptrend, but I wouldn't be surprised, as I mentioned, to see the stock pull back some and perhaps give a better entry point. But largely, I just want to see more clarity and more transparency and more certainty around what the company's plans are. And I will look into this company, and maybe we'll do a follow-up video a few weeks down the road. But that is my quick take, Jacob, on Gevo, Gevo. For me, it's kind of a wait and see. If a 30% profit is big according to your trading plan, then I would go ahead and take the profit now. If this is money that you are kind of expecting to put into a longer term, innovative, disruptive company in an up and coming industry, and you are willing to kind of sock it away and look at a few years down the road and see what it's done, then by all means hang tight and stay in it. So can't give you personalized investment advice, but I hope that analysis is helpful to you. And I just want to say I do welcome. We get a lot of questions. A lot of them are general about my own trading style and philosophy and things of that nature. The services that I run. Green Zone Fortunes is a service where we buy stocks in disruptive, innovative industries, and we look to hold them for anywhere from 6 months to 3 years. We use our Green Zone ratings to find the best cream of the crop stocks. I also have an options service, Home Run Profits, where we trade options over a 2 to 3 month time frame. And I have another service called 10X Profits, where we basically time the market long and short, riding the trends in both booms and busts. So we get a ton of questions about those services as well as in general, my investment philosophies. But I really welcome individual stock tickers. If you want to know my take on an individual stock ticker, email us. Matt will give you the email address. Tell us the ticker. Tell us whether you're in the stock or not, why you like it. And I will use the analyses at my disposal to kind of show you what I think about the stock. So thank you very much, Jacob, for that. I think that's all we have time for today. But Matt, I'll let you give folks the email address so we can get hopefully a lot more questions. Absolutely.
That email address is feedback@moneyandmarkets.com. We'll drop that down right here so you have it. But yeah, and Jacob, thank you for the question. Thanks to everyone who has written, everyone who watches the videos we have on our Money and Markets YouTube channel. If you're not subscribed, I encourage you to do so and make sure you click that notification bell so you get notified every time we put out a new video. We have a lot of stuff on the horizon. We've introduced a new community membership program on our YouTube channel, which I definitely encourage you to check out. You can click join right next to Money and Markets there on our channel page and find out more about what you'd get by becoming a member of our community. So that's all the questions I have for you this week, Adam, and we'll talk again soon.
Sounds great. Talk soon, Matt.